everyone, good morning. Okay, I'm so sorry for the 5-10 minutes, but okay, but just to begin with, we are now going to start from today our CAFM marathon series. Okay, so basically, what I require from y'all is just to pay attention, have a book, pen, and a calci along with you. If you need to write down the examples which I'm solving, you can do that. Otherwise, you can even just copy whatever is there, or else just sit, listen, understand. My solved notes are already there. Okay, so you can always refer to my solved notes later on. To begin with, we are kicking it off today with the marathon. We are going to start with corporate accounts and I'm going to take up issue of shares. Alright, so today we begin with issue of shares and we will be completing the entire issue of shares. Right? So, in whichever chapters I am taking, as I had told you all, that these are the important weighted chapters. Okay, from your 60 marks of your corporate account, the chapters which I am doing in marathon, they have a good amount of weightage, means almost 70% of your 60 marks will get covered in these chapters and they are coming as important compulsory questions. Okay, 12 marks, 15 marks, like that. So it is all based on exam, from the exam point of view. I'll be solving all your past exam questions of this new. So you all have to nothing, like there's nothing such to worry about, and I'm going to share my notes. I had shared my schedule. I'm sharing it right away again once, if in case you all have not noted down, this will be my schedule for corporate accounts as well as for financial management. These will be the chapters and my timings and my days are already been put here well in advance. Okay. So all solving of questions, study material, we can have an interaction for a face-to-face session. Students are welcome for this class. You all can come to Andheri West branch and you all can sit along with me and we can have a face-to-face class. There are limited seats, so please, if you all want, enroll fast and you have to worry nothing. Even if you all have not studied these chapters, I'm going to teach you all from the basics, then certain sums, and then we will go to past exam questions. So everything is going to get covered. All right. So for those who do not know me, I am CS Fatema Kagalwala and I have been teaching these practical subjects of CS executive, accounts, financial management for over 8 years now. Okay, and trust me, these were my favorite subjects when I was doing CS, and it has helped me gain more than 70 marks in these subjects. So I want all of you all also to just focus on what has to be done from the exam point of view before we start and begin. Be positive and we are going to it well. So starting with, so now before, just I hope everything is clear, like you all can see my screen and I'm audible. I just want you all to put a thumbs up so that I can just begin with the explanation and I will start the chapter. So if you all can just hit the like button or a thumbs up button so I know that yes, you all are with me. Okay. You all want me to increase the sound volume. I hope now it is clear. Okay. Fine. Hello everyone. Welcome once again back to our marathon classes. We are starting with corporate accounts as a subject. CAFM 60 marks of your section. Okay. To start with, I am taking up issue accounting for share capital, part A of that, which is issue of shares. Now, before I begin explaining what is issue of shares and what all it involves, just a small understanding first about this particular chapter. Okay, if you will see this chapter in your module, it is accounting for share capital, right? Correct, absolutely. Now, while I was teaching this entire chapter, I had broken down this chapter into parts. Okay, so I had issue of shares as part A. Okay, then there are a lot of parts to this particular chapter. Then we have buyback, buyback of equity shares. Then we have right and bonus shares. Okay, then there is something like which I had thought was ESOPs. Then there was one more part I had taught about redemption of debentures. Redemption of preference share capital. And then there was one more part about underwriting of shares. So this entire accounting for share capital, I had broken down into the sections, and this was how I was teaching. Now, all from amongst all, everything is important. Okay, even underwriting is important. It can be asked for 5 marks. Redemption of preference share capital 3 marks. ESOPs 5 marks. Right and bonus 3 marks. So all this is actually important from your exam point of view. This entire chapter, but it has a different type of a weightage. When I'm talking about issue of shares, issue of shares carries the most weightage amongst all these parts, okay, because it covers a lot of things in that. To begin with, issue of shares, what I am going to cover is here. Okay, issue of shares is of two types, okay, understand. One is issue of shares for cash and one is for consideration other than cash. Okay, other than cash. Okay. Now talking about shares. What is a share? Share is like shares is allotted to who? When a company comes to the public, okay, and tells the public that we are going to raise money by taking, by making you all shareholders. Okay, so basically a share gives you a portion in the share capital of that company. It's your share. So the company is going to announce that, okay, we want to have a public issue. Public issue means what? We are going to allot shares to the public and raise money from the public and use that money for the purpose of XYZ, for whatever is their motive for using that money, okay, for their capital expansion or for a particular project. Okay, so there will be a company coming for purpose of raising capital from the public, that is issue of shares for cash. Okay, there is something also known as issue of shares for consideration other than cash. Happens when, now say suppose I have just started my company, it is hardly any time, 6 months ago, and I am a company and I have a vendor from whom I am purchasing plant and machinery, and I'm purchasing some furniture and fixture. Okay, I have a vendor and he is giving me this plant and machinery for 10 lakhs, furniture and fixtures for 5 lakhs. So basically I have to pay him 15 lakhs. Okay, in short I am explaining, we will do the sums based on this, but just for you all to get an understanding, what does that mean? So now 15 lakhs rupees I have to pay to the vendor. So I tell my vendor that instead I give you 15 lakhs. Why don't you become my shareholder? I will issue shares to you. Okay, instead of this entire 15 lakhs to be given in cash, I will give you my shares worth value, face value, say rupees 100. Okay, so I am going to give you 15,000 shares. So that is going to be 15,000 shares of 100 rupees each. So 15 lakhs rupees will be your share capital in my company. So it is done at the time when the company is trying to pay off their vendors in form of the capital instead of cash. It is also that, say, promoters have done a lot of work. Okay, promoters who are the ones who give the birth to the company, and they have done a lot of expenses towards the incorporation of the company, and they have to take something in return, and or the company has to pay something to the promoters. Then yes, again the promoters can be given shares. Instead of cash, they are given shares and they become the shareholders of the company for the entire preliminary expenses, etc., whatever they have brought into the company. Okay, so there are two things which can be there for consideration other than cash. Yes, even employees can get in form of stock option scheme. Okay, they also get it. Like if you have done a lot of good work, then you will get it as a stock option. You apply for these particular shares. So there can be sweat equity shares, which there is no money taken from the employees. So that is also for consideration other than cash. Bonus shares, when company has got a lot of reserves, they want to convert it into capital. So then capitalization of reserve. Capitalization of reserves can be done in form of bonus, where we do not take any money from the shareholders. We just give them shares in form of bonus. I had Reliance shares. I had 6 shares. They gave me bonus 1:1. So now I have plus more 6. Then again they gave a bonus. Again 1:1 ratio. Now basically I am standing at good amount of shares of Reliance by just taking 6 shares once at a time. Okay, so this is how the bonus takes place and no single penny has been taken from the shareholders. So consideration other than cash is also a part of your issue of shares. Coming to issue of shares for cash. Okay, now I'm going to take one simple example and then we will pass the journal entries based on examples. Okay, issue of shares from your exam point of view also is all about journal entries. Okay, now say there is a company XYZ Limited. Okay, they want to issue they want to issue, say, 100 shares. I'm taking simple amounts and figures. They want to issue 100 shares. Face value of the shares will be 10 rupees. Now what happens is, generally, if in case you have ever applied in an IPO or all have seen the how IPOs also take place, you all must have seen that you have to pay some amount at the time of applying for the shares, and then at the time of allotment you have to pay something. So it is like, say, if you went to a college, okay, for your purpose of your admission. So you take an application form. For that application form, you paid, say, 5 rupees. And when you were allotted the seat, you paid for the first year, then you paid for the second year, and then you paid for the last year. Okay, it is as simple as that. So even the companies, when they want to do these type of issues of shares to public and take so much of money, crores of rupees, so what they do is, this entire money they split it in stage wise. They say that at the time of application, you all pay us only 2 rupees. Then at the time of allotment, we will take 3 rupees. Okay, then there we stop, and then we may give you a call. Okay, we will write a letter to you all to pay 2 rupees, and then in the final call, whenever we will need it, we will take the last balance 3 rupees, and that is how it is going to become 10 rupees. Correct? Okay. So now this entire stage wise, this is generally what is happening. Okay, so this entire stage wise collection of the money requires an accounting treatment. So how is the accounting process to be taken place? Okay, it has to be followed as per the principles laid down for issue of shares. So for application stage, allotment, first call, final call, all the 4 stages, there will be 2 journal entries each for each stage, 2 journal entries for each stage. For application, I will have a receipt and a transfer entry. For allotment, I'll start with a transfer, then receipt, then again transfer and receipt, and transfer and receipt. Now, what is this transfer? What is this receipt, ma'am? Nothing. It is simple. Receipt means when you receive the money. Okay, when we receive the money for that particular stage. Okay. And transfer is whatever you have received, we transfer it to the share capital account. The share capital account. That is it. These 2 journal entries for each stage has to be understood well. If you all understand, this entire chapter is solved. Okay, I'm going to take you all through different situations in the same example. Okay, so right now, say my first stage is application, second allotment, third is first call, and the fourth stage is final call. Starting with the application stage. Okay, applications. I have received money. Always think from the company's point of view. You are a company. Okay, you have issued shares. You are passing journal entries. What are you? You are a company. So company is receiving money. So bank account debit, money coming inside. How much money I am taking on application? Only 2 rupees. How many shares we have issued? 100. Correct? 200 rupees. Why did I get this money? Because of share. Perfect. Share application account. 200. Okay. Now this is being money received on share application. This is receipt. Now transfer. Simple. Share application. Where will I put this money? Superb. I will put this money to share capital account. Transfer it to equity share capital account. When write equity share capital. Okay, equity share capital. These are my short forms. You all will get used to it in some time. Now coming, the first stage is over. 2 journal entries, simple, done. Third. In the third means that is the second stage, allotment stage. Okay. In my allotment stage, I do not wait for the money coming in. Okay. There will be a date when the money will be collected for the purpose of allotment. What I do is I first do the transfer. I say that share allotment. I have to allot shares to whoever has applied. Okay. As per 3 rupees or for 100 shares, I have to do the allotment. I will directly first transfer it to the equity share capital account. And then on the date of receipt, we will say bank account debit to share allotment account 300 rupees. Okay. So the second stage is over. This is how the accounting principles is. Generally, all this is given in the form of dates. They might not give you dates. They might give you dates. If dates are given, you are supposed to mention the dates. Okay. So allotment stage, immediately things start changing. You will first put the transfers and then the receipt will come on the later journal on a later date. Now coming to the first call. On first call, how much money I am collecting? Again, 2 rupees. Okay, so same again, the same thing. I will do the transfer first. So I will say share first call. Account debit. I am taking 2 rupees on 100 shares, 200 to equity share capital account 200. And then I will do the receipt. I will say bank account debit. Bank account debit 200 rupees received. Why? Because of share first call account. Right? So in short, if you see in all the stages, basically you are doing bank account debit to equity share capital. See, share first call, debit, share first call, credit cancel. No, as per the journal accounting rules. Okay, one debit, one credit of the same amount. It gets automatically nullified. So bank account debit to equity share capital we are doing. But no, we cannot use these type of shortcuts. we have to kind of follow the rules, and it has to be mentioned in this way. Okay, so done. This is your call stage, and last one is your final call. Share final call. We are taking 3 rupees. So because of 3 rupees, it is going to be 300 to equity share capital account 300. And then the last one will be the receipt, bank account debit 300 to share final call 300. Okay, so that is it. Like, means totally, if you see in my bank, I got how much? I got 200 rupees. Then in my bank I got 300 rupees. Again in my bank I got 200 rupees. And then last again I got 300 rupees. So 500 plus 500, 1000 rupees. Yes, has to be. Why 1000? 100 rupees, 100 shares, 10 rupees each, 1000 should come in my bank account. And equity share capital also, if you will see, it will be 1000. 200 equity share capital, 300 equity share capital. Again 200 equity share capital, and this is last 300 equity capital. So amount received 1000, towards equity share capital 1000. Done. Okay. Now tell me one thing. I'll just change my example a little bit. Okay. I'm saying the face value is 10 rupees, but we issued the shares at premium of rupees 2 per share. And this premium we collected on the allotment stage. What do you mean by shares issued at premium? The value is 10, but company is taking more money from you. Okay, we are taking 2 rupees as a premium, and you all are ready to pay it also. Okay, so that 2 rupees premium is not for the shares capital. There is a separate account which is known as security premium, right? So we cannot put that money in share capital because this 2 rupees is extra, collected over and above the face value. Face value is more than the issue price. Therefore, I can say that is 2 rupees is my premium. Now that 2 rupees is collecting at the allotment stage. That means on allotment stage I will get 3 plus 2. Only then my issue price will become 10 plus 2 equal to 12. Right. So now what will happen is, by this allotment stage, the journal entry will change. Why will it change? Because I am not going to get 200 rupees. Sorry, I am not going to get 3 rupees on my allotment. I am going to now get, I will now get 5 rupees on 100 shares. 3 plus 2. So I am going to get 500, and here also 500. Correct? So in my bank account also it has to be the same thing. 5 rupees on 100 shares. So it has to be 500. Right? Bank account debit 500. Oh, sorry. My bad. Okay. Okay. So share allotment account debit 500 to equity share capital. Now equity share capital can never be written on any other value but only on the nominal value. Okay. You cannot write capital account on any other values. Nominal value means what? It can be written only with respect to its face value. So what is the face value? How much face value I am taking on the share capital? Only 3 rupees. On face value I am taking only 3 rupees on allotment. So my equity share capital also will stand at 3 rupees only. 300. So what will happen to this balance 2 rupees which I took extra? I will have to mention to securities premium account, a separate reserve kind of account wherein I'm putting this extra money received in security premium, because security premium is governed by company law. Okay, the usage of security premium is also governed by company law and accounting principles. You cannot use security premium everywhere. This money you are supposed to use for certain purposes as mentioned in the act. Okay, so there was a past exam question in which they have asked where to use security premium, and I have solved it and I have given it to you all in the notes also. So security premium 200 rupees will now appear in my transfer entry of my allotment stage. Transfer entry. In the bank I received 500 to share allotment 500. This is done. There is no problem here. But the important entry is of the equity share capital and securities premium. Okay. So wherever the premium is collected, in that stage, in the transfer entry, the premium will get reflected. Okay, if you all want, you all can write down this as a note that whenever a premium is there on the share capital, that premium in whichever stage it is, if it is in allotment stage collected or it is collected at the application stage, whichever stage it is collected, it has to be recorded in the transfer entry of that stage. There are only 4 stages. There can be 3 stages also. Application, allotment and final call. Okay, first and final. There can be 3 stages, there can be 4 stages, depending on what the company wants to do with that money. Okay. Clear? Now we will change a little bit. Okay, we will put certain addition to this. Now what has happened is, there was Mr. A. Okay, who had applied Mr. A, who had applied for 20 shares. Okay, he did not pay me my first call money and he also did not pay me my final call money. Okay, we had allotted him 20 shares. Okay, out of 100 shares, I will know who all are my shareholders, A, B, C, D, F, G, H, whichever. So Mr. A was given 20 shares. Now when company is calling them to pay the first call and the final call money, on first call 2 rupees and on final call 3 rupees, this Mr. A is not paying me. So now what happens? Now basically first call and final call stage I'll have to go to. That means the last 2 stages. So when I'm doing the transfer, I will not know that Mr. A is not going to pay, because I will come to know when the money will hit in my bank account, right? So my transfer entry of that stage has nothing to do. It will remain the same. 2 into 100 shares, 2 rupees, share call account debit, first call to equity share capital. But when the money will come in my account, I will get money of 2 rupees only on 80 shares. Right. So if I'm getting that much only, I'll have to write also that much. It is going to be only 160 rupees. Right. Now 160 correct. But share first call was debited by 200. It has to get credited also by 200. Okay. It was debited by 200. Credit also by 200. So this 40 rupees which I did not get, 2 into 20 shares. There was Mr. A allotted 20 shares. He did not pay me my 2 rupees. That will be my calls in arrears. Okay, 40 rupees will be my calls in arrears. Same thing now, final call also. I did not predict he will not pay. I cannot predict that. No, but I am doing the transfer first. So share final call transfer entry I will not touch. But what will happen in case of the receipt? At that time I will come to know that okay, in my bank account I got money only on 80 shares with respect to 3 rupees. That is 240. But share final call is to be credited also by 300 because it was debited by 300. So this is going to be my calls in arrears. 60 rupees. Why? Because on my 20 shares, I did not get 3 rupees, which was my final call amount to be received on that 20 shares. Clear? So basically, if there is calls in arrears, there can be calls in advance also. There are some people who like to pay in advance. Okay, they say that on allotment only, on first call only take my final call money also. No? So that is a different thing. Okay, but generally in the sums we are more focused on calls in arrears. Calls in arrears or whatever, even if it would have been calls in advance, it will always be recorded in the receipt entry of that stage. Okay, calls in arrears or calls in advance will always be recorded in the receipt entry. When the money will be received, I will come to know whether there is calls in arrears or okay. So let the story continue. What happens with this calls in arrears? What do we mean by this calls in arrears? Like the company is giving a call, a notice, okay, to that shareholder, Mr. A, that kindly come and pay the money. Your first call money is also pending. Your final call money is also pending. And they give them the time paid within 15 days or 45 days of this notice, whatever is their call. Okay. And then they again send a notice saying that you have still not paid. This is the final call which we are writing to you. And if you do not pay now also, we will forfeit your share. Superb. Forfeit of the shares takes place. Okay. So now what does this mean? Forfeit of the shares. Forfeit means what? That the company will keep the money paid by Mr. A so far. Whatever he has paid, no? A company will keep that money also, and company will cancel Mr. A's name from the shareholders list. Okay, they will put a cross. Just saying it as a form of story, but I am kind of trying to make you all explain that they will now not consider Mr. A as their shareholder, and whatever money you have paid towards that shares will be forfeited, will be kept by the company. So now if I am forfeiting, I am company and I am forfeiting these shares, 20 shares of Mr. A, I will have to now pass the journal entry. Okay, so I had completed 8 journal entries so far. So my 9th journal entry will be about share forfeiture. Okay, very, very important concept. Okay, share forfeiture. When I was issuing shares, I was crediting my equity share capital, right? It is like money coming in. So it's a capital. Capital is always on the credit side. Okay, so we take it on the equity share capital also in the balance sheet. So when I'm cancelling capital, I will debit it. Easy. So what I will say, equity share capital account debit. How many shares I'm cancelling? 20. Okay, share capital always at nominal value. I cannot write any other value. So what is my nominal value on the capital? 10 rupees. So I'm cancelling equity share capital to the extent of 200. 2. Share forfeiture. Share forfeiture means amount paid on face value. So how much did Mr. A pay me on my face value? He paid me my application? Yes. He paid me my allotment? Yes. He did not pay me my first call and final call? No. So how much did he pay me on my face value? 5 rupees? Very good. So 5 rupees I am going to put it in my company's share forfeiture. It is like a piggy bank. I am going to put it over there. Okay, it is there with me. So on 20 shares, 5 rupees Mr. A had paid. So it is going to be 100. 2 calls in arrears. Calls in arrears will be total unpaid amount. Okay, total unpaid amount. So on 20 shares, how much he did not pay? He did not pay me my first call. He did not pay me my final call. Total unpaid amount. Okay, so again 5 rupees. So this is going to be 100. So calls in arrears, share forfeiture. Let me check my calls in arrears. Okay, just verify. Calls in arrears is 100 over here. In credit side, so it has to be debit also by 100. So see this 60, 40. Debit also was 100. Credit also is 100. So calls in arrears gone. This 20 shares gone from my book. I have money in my share for feature account. Now what will I do with this 20 shares? What will the company do now? Company cannot do anything. They will do just simple thing. They will find somebody. Okay, they will say, okay, let us find somebody who is ready to take these shares. Okay. So now what they will do is they will reissue. Okay, reissue 20 shares of Mr. A to Mr. Z, or say to Mr. B. So there they have found one person who is ready to take up this 20 shares. Company is telling them that we will give you these shares in 9 rupees and we will make it fully paid. So now Mr. B has agreed 1 rupee discount he is getting. So what will be the journal entry? Bank account debit. So company is going to get 20 into 9. Why? Because there is a discount on issue to equity share capital. Okay. Now equity share capital means discount on issue is only 1 rupee. Equity share capital will always be at nominal value, as I told you all. So it has to be 20 into 10, 200. So how much will be in my bank account? 180 rupees only, because I have issued it only for 9 rupees. Now shares cannot be issued at discount as per law. Okay, unless it is a reissue of forfeited shares. Okay, otherwise shares issue at discount is prohibited. You cannot reissue the shares on discount to the public. However, if there is a reissue happening of the forfeited share of a given shareholders, reissue is permissible. Okay, so 9 rupees I took from Mr. B and I told him I am making it fully paid up. Equity share capital 200. This discount on issue or loss on issue, if I can mention it, this loss on issue I will remove from where? I will remove it from my share forfeiture account. You can directly write over your share forfeiture, or you can write share forfeiture, another journal entry, say share forfeiture account debit to loss on issue or discount on issue, whatever terms you want to use. Okay. How much? 20 rupees. Okay, now in my share forfeiture I had 100 rupees. I used 20 rupees. These shares were forfeited. They have been given to Mr. B. Share forfeiture account now has to stand closed, because now there are no shares only remaining. What will I do with this share forfeiture? So what I do is I transfer the balance. Transfer of balance in share forfeiture to capital reserve account. Why capital reserve account? Because it is a one-time profit on capital. It's not going to keep recurring again and again that I'm going to put in P&L account. Okay, so share forfeiture account debit 80 rupees was the balance to capital reserve account 80 rupees. Okay, so if You have done all the journal entries and you forget this last one. You do not close share forfeiture. That means your 20 shares which were forfeited are still shown as a balance. If you don't pass this entry, your marks will definitely get deducted to a greater extent. So this entry is very important when your entire story of reissue has taken place. Whatever is the balance in your share forfeiture has to get transferred to capital reserve. Okay, everyone. Now, small thing. Okay, just one small change in the sum I am doing. But I'll show it to you in a separate way of journal entry. Say suppose this Mr. A, okay, 20 shares was allotted. He had applied for 20 shares. I'm just changing my example a little bit. He had applied for 20 shares. Okay, applied and allotted 20 shares. He did not pay me my allotment money also, which was 3 plus 2 rupees as a premium. Okay, so calls in arrears will appear even in the allotment stage. Okay, it will appear it even in the allotment stage calls in arrears. Okay, at the time when money will be collected, that Baba bank account, it will not show 500. Here, the bank account will be showing me some other amount. Why? Because there was no money received on my 20 shares. So, bank account, I will get only 80 shares. On 80 shares, I will get 5 rupees, no 400. Why? Because Mr. A did not pay me my money. He was having 20 shares. He did not pay me my 5 rupees. To share allotment account. Okay. So calls in arrears will appear in the receipt entry of that allotment stage also. Rest everything is the same. Final call, first call. He did not pay me my final call money. He did not pay me my first call money. But what will happen in the share forfeiture now? The share forfeiture journal entry will now change. Why it will change is, because I want to show you application, then allotment 3 and then plus 2, then first call is 2 and then final is 3. Okay, what is the journal entry of share forfeiture? Share forfeiture is cancelling 20 shares. Okay, 20 shares I am cancelling. So I will debit equity share capital account. Okay, how many shares? 20. What is the face value of the shares? 10 at nominal value. Okay, 200. Now securities premium is unpaid. He did not pay me my allotment money. So he did not pay me my allotment money means he did not pay me my money on securities premium also. So when I was collecting premium, I was crediting. When I did not get premium, I'll have to debit it. Okay, securities premium account debit. On 20 shares, he did not pay me my 2 rupees premium. 40 rupees. 2. Share forfeiture. Share forfeiture is paid amount on face value. How much did he pay me on my face value? Only 2 rupees. So how much it is? 20 into 2. He paid me only 40 rupees. 2 calls in arrears. Calls in arrears means what? Unpaid amount. Unpaid total amount. Total. So total amount means what? He did not pay me my 3 plus 2 plus 3. Plus he did not pay me my 2 rupees. Total unpaid amount. Unpaid on face value with the premium. It is going to be how much? 5 plus 5. 10 rupees. Totally he did not pay me my 10 rupees on Total unpaid amount is 10 rupees. Done. Now the journal entry tallies. Okay. So remember one thing, if securities premium is paid, it will not get recorded in the share forfeiture journal entry. But if securities premium is unpaid, then in the share forfeiture journal entry, it will definitely get recorded. And hence your amounts are going to change to that given extent. Okay, so this was the entire story of XYZ Company Limited, who came with 100 shares to public for issue at a premium of rupees 2, wherein there was Mr. A who did not pay money on his 20 shares. His shares were forfeited, and after that it was reissued to Mr. B for 9 rupees as fully paid up. I have just given you all this as a separate example, so that when we are going to solve the sums, there can be a situation where securities premium was also unpaid due to a stage where premium was supposed to be collected was in arrears. So then in that case we will have to understand this journal entry. Okay. So now I'm starting with my questions. Okay, easy questions, there's nothing you all have to worry, you all have to just pay attention now. If in case you all have copied the example, very good, it will really help you all relate to any questions asked in the exam. Okay, let's read a question. Easy question. P Limited. Okay, until now, so far, I hope everything has been clear so far. I just want you all to put a thumbs up or a like sign, so that I know you all are with me and things are solved properly. Okay, so then we move on to the sums. I have taken good sums for your understanding. Okay, fine. I think I'm pretty clear. You all are able to understand. No problem. Let us read the first question. P Limited was registered with an authorized nominal capital of rupees 10 lakhs. Okay, that was divided as 1 lakh shares of rupees 10 each, out of which 50,000 equity shares were offered to public for subscription. The shares were payable as follows. Now, what does this mean? When you register a company, you will have an authorized capital. You will have to register with that many number of capital. So, your amount of registered capital is 10 lakhs. How did you get that amount? You are having 1 lakh shares of rupees 10 each. Not necessary entire shares you will issue it to the public. You have been registered with this capital. Okay. Out of that 1 lakh shares, 50,000 shares company is coming out and telling the public to pay as a public issue, public subscription. They are saying 3 rupees on application is to be collected, 2 on allotment, 2 on first call and 3 on final call. This is like my example, same thing. The shares were fully subscribed and money was duly received. Show the journal entries, journal and the book entries. Very easy. Same thing, same like my example. So solution, in the books of P Limited, journal entries in the books of P Limited. How many shares are given to public? 50,000 equity shares at rupees 10 per share. Issue is at par. At par means what? Face value is the same as the issue price. See, anything mentioned about premium? Nothing, no? Rupees 10 each. So application stage 3, allotment 2, first call, final call, 10 rupees on the face value. Journal entries. First will be my application stage. In application stage, we first pass the receipt and then go to the transfer. In case of allotment, we will do transfer receipt, first call, transfer receipt, Final call also transfer and receipt. So starting with the application stage of receipt. I am going to receive money on 50,000 shares. How much? 3 rupees. So 3 into 50,000. 1,50,000. Okay, yeah, I have written 1,50,000, no? So bank account debit to share application account 1,50,000. You all are supposed to write narration unless mentioned in the question that narration is not required, being money received on share application. Okay. Next one is share application account debit 50,000 shares. You will transfer share application to equity share capital account. Okay. So share application account debit to equity share capital 1,50,000. So money received on application is transferred to equity share capital account. So first stage is over. Now the next stage is allotment. In allotment, I will do the transfer entry. So share allotment to equity share capital 50,000 into 2, 1 lakh. And then the receipt bank account debit to share allotment 50,000 into 2, 1 lakh. I am not wasting much time on this sum. Then first call 2 rupees I am collecting. So on 50,000 2 rupees share first call to equity share capital, and then the receipt bank to share first call account. And then the last is a final call, transfer entry, share final call to equity share capital, and the receipt bank to share final call account. That is it with this sum. Just to make your basics more strong. 4 stages, 2 journal entries each, 8 journal entries we finish. There cannot be a 9th journal entry because there is no additional story to this question. Okay. Now coming to a interesting sum. There is a lot of things now in this sum. Question number 2. D Limited issued 20,000 equity shares of rupees 10 each at a premium of 2 rupees per share. Very good. We have premium now. It is payable as follows. On application 5 rupees including 1 rupee premium, and on allotment also again 5 rupees including 1 rupee premium, and on final call rupees 2. Applications were received for 24,000 shares. Now this is something very different. Okay, 20,000 equity shares company has issued to public, but applications were received for 24,000 shares. What did the company do? Letters of regrets were issued to the applicants of 4,000 shares, and then allotment was made to the other applicants. Mr. A, who was holding 200 shares, he failed to pay the allotment and the call money. His shares were forfeited. Show the journal entries and cash book in the books of B Limited. Okay. Now what happens is, see, issue of shares. Okay, the company had issued 20,000 shares. And applications also were received, say, for 20,000 shares. I will say issue is fully subscribed. Okay, number of seats available in the college, all the seats were applied and allotted. Done. Exact number, 100, 100. Here also 20,000 shares were put to the public and 20,000 applications were received. This is fully subscribed. What can happen is, in our question, we have received application for 24,000 shares. This is known as over subscription. In case of over subscription, 2 things can happen. Okay. Either the company will not allot for that 4,000 extra. They will reject it and refund it. Reject and refund the money. Allotment will not happen for this extra 4,000. They don't have only, no. Or else they can do a pro-rata allotment. They will say that, okay, whoever has applied for 3 shares, we will give them only 2. Okay, pro-rata. Adjustment they do. So that is also possible when there is oversubscription. And if there is undersubscription, to the extent of less than 90%. At least 90% has to be subscribed. If it is less than 90%, your issue fails. You cannot go to public. You have to refund the application money. So there is under subscription, over subscription, and fully subscribed shares. Okay. Now let us understand the solution. In the books of B Limited, 20,000 equity shares. Okay, issued at a premium. What is the premium amount? 2 rupees. What is the face value? 10 rupees. How they are collecting the money, I will write it separately. Okay, I'll write application, allotment and call. On application, they are taking total 5, but 1 is premium. So on application, actually on face value, I'm taking only 4 rupees plus 1, which is a premium. Same thing on allotment, I'm taking 4 plus 1 as premium. So the balance 2 rupees is on the call. So 10 plus 2 is my issue price. Right? Now, journal entries. Journal entries are easy until Mr. A, who is holder of 200 shares, means he must have applied for 200 shares. He did not pay me my allotment and call money. Also, this sum is a pretty simple, even if there is over subscription. You see 20,000 and 24, they have refunded. They have sent letters of regret and refunded the money. So what will happen here is, first application stage, I will receive the money. Receipt will happen. Receipt will happen on 24,000, not on 20, because they have mentioned 24 shares applications were received. So on 24,000 I am receiving 5 rupees. So it's going to be 1,20,000 to share application account. 1,20,000. But when I will transfer this, okay, when I will transfer share application account debit 1,20,000. But on my share capital, I will have to transfer only to the extent of 20,000, because that much is the issue. So 20,000 into 4 face value 80,000, and 20,000 shares into 1, which is the premium. So that will go in the securities premium account. Right? Balance 4,000 extra shares were refunded. So whatever money I received extra, right, 20,000 I received extra, I am refunding that money. I do not want to do pro-rata allotment. I am rejecting these applications. If I am rejecting, I can't keep that money, no. I have to refund it and close it. Okay, so even though in share application 1,20,000 was received, I have refunded 20, 1 lakh will be the amount. Exactly, 20,000 shares, rupees 5 on application. Understood application stage. Now coming to the allotment. Now allotment story is starting. Allotment again. Now share allotment basic. Okay, share allotment will happen of 20,000 shares only. Okay, so 20,000 shares. On allotment also we are taking 5 rupees. So to share allotment account debit 1 lakh. Equity share capital always at nominal value. What is the nominal value I am taking? 4 rupees. So 20,000 into 4 will be 80. To securities premium account 20,000 into 1, 20,000 rupees, we are taking it in form of premium. When transfer took place, I did not know Mr. B will, or Mr. who is it? Mr. A will not pay. Now when the transfer finished, now receipt took place. At the time of receipt, I came to know that Mr. A, who was holding 200 shares, he did not pay me my allotment money also. He did not pay me my call money also. On allotment it was 4 plus 1. On call it was only 2 rupees. Fine. So he did not pay me my allotment money. So in my bank I will receive money only on 19,800 shares. No. Because there is calls in arrears on 200 shares. So 200 into 5, 1,000. So balance it is 19,800 into 5 rupees. 99,000 only I will get it in my bank account to share allotment 1 lakh. 1 lakh. So receipt is done. Coming to the final call, same thing, share call account debit. How much money I am supposed to get on call? 2 rupees for 20,000 shares, that is 40,000. To equity share capital, 40,000. There is no premium in this stage. But in my bank, I will receive money only on 19,800 shares, or with extent to 2 rupees on that each share, 39,600. Calls in arrears will be on 200 of Mr. A into 2 rupees, that is 400, to share call account 40,000. Okay, so receipt and transfer. There were 3 stages, therefore 6 journal entries, right? Each stage 2 journal entries. Over. Last thing they are telling me that the shares were forfeited. So I will have to take my story to one next stage. Forfeiture means what? Cancelling of the share capital. How much shares I will cancel? 200. At what value? At the face value. So equity share capital account debit 200 into 100. Sorry, please write down this 10. Equity share capital 2000. In my this case, securities premium is unpaid. See this. Security application stage money he paid. Okay. But in case of my allotment, this 1 rupee is unpaid. No. Unpaid securities premium. So it has to appear in the share forfeiture entry also. So securities premium unpaid 1. On 200 shares, 1 rupee he has unpaid on premium. So 200 rupees. Share forfeiture is the paid amount on face value. How much he has paid me on my face value? He has paid me only 4 rupees. He has paid me only 4 rupees. So 4 rupees I am going to take it and put it in my share forfeiture account. Share forfeiture account debit 4 rupees on 200 shares 800. And calls in arrears will be total of unpaid amount. How much is my total unpaid amount? Total. This. Allotment 4 plus 1 and plus 2. So total unpaid is 7 rupees. So 7 into 200, 1400 will be my calls in arrears. Okay, so this will be my 7th journal entry. They are asking me, after this make the cash book. Okay, so cash book, ledger kind of a book, debit side, credit side. Okay, when money came in the account due to application, share application 1,20,000. Then I refunded the money, so it will go on the credit side, money moving out, refund 20,000. Then on allotment I got 99 and on share call again I got 39,600. So the balance in my cash book is 2,38,600. That is the closing balance. That same will become my opening balance. Opening balance brought down. Okay, brought down. Carried forward and this will be brought down. Clear everyone? Any doubt? Okay. So this was our question number 2. Okay. First and second done. Alright. Now I am starting with question number 3. It is a little lengthy question. Alright, but it is very interesting. Let us read the question. Messrs. Herbal Tea Plantation Limited was registered with a capital of rupees 1 crore. It is divided into equity shares of rupees 100 each face value. So face value is 100 of each share. The company offered to public 50,000 shares at a premium of 20 per share. The amount on share was payable as follows. 20 rupees they took on application. They took 50 rupees including this 20 premium on allotment, 20 on first call and balance 25 on final call. Applications were received for 75,000 shares. Shares were allotted to the applicants on pro-rata basis. Oh, so what happened was 50,000 shares was offered but applications was received for 75,000. So 50,000 offered and application received for 75,000. They are saying that the shares were allotted on pro-rata, means they did not refund this extra 25. They were doing pro-rata allotment. Okay. Kantibai, who was allotted 500 shares, he did not pay only the allotment money. He also failed to pay the first call money, and his shares were then forfeited. Sheetal, who was holding 200 shares, she did not pay the first call. Final call was not made only to the public. Make journal entries in the books of the company. Okay, now this is a matter of oversubscription and pro-rata and calls in arrears and forfeiture. So everything together. Okay. So comprehensive question I have taken. In the books of Herbal Tea Plantation Limited. Okay. Let us just write it down a little bit. Application stage, allotment, then first call, and then there is some final call. So on application they are taking 25. Then on allotment they are taking 30 rupees plus 20 on premium. Then on the first call they are taking 20 rupees. And then on the final call they are taking 25 rupees. Just for me to quickly put it on the notes. Even if you all will write it in your question as given, it is going to look fantastic. Okay, journal entries. Starting with the application stage, receipt. But receipt, 50,000 shares were offered, 75,000 were received. So I'll have to take care. My application stage will be with 75,000 shares. Okay, so 75,000 into 5 rupees, 18 lakh 75. Share application, bank account debit to share application, being application money received on 75,000 shares at rupees 25 per share. This application money has to go to transferred to share capital. I am not doing any refund. If I am not doing a refund and I am doing a pro-rata allotment, that means my extra money on application has to be adjusted with allotment. Yeah, because I am doing application to allotment pro-rata, na? So here also I will now have to do the adjustment only. So what I'll say, share application account, yes, 18 lakh 75. But equity share capital I cannot write on 75,000 shares. No, I don't have only. So I will say 50,000 into 25, that will be 12 lakh 50. So this extra 25,000 on which I collected 25 rupees, 6 lakhs 25. There is extra 25,000 shares, right, on which we got collected 25 rupees in application. I will adjust it to my share allotment. I will consider that money on share allotment to this extent is received. 6 lakhs 25,000. I'll adjust this towards my allotment stage. Okay, so this is important. Very, very important. Okay, because there is no refund and I'm trying to adjust it. I'm adjusting the entire 25,000 extra shares. So I'm adjusting it at the allotment stage. We always adjust it with the allotments. Now, in case of allotment, first the transfer will take place. So, how many shares I will allot? Obviously, 50,000 into 50 rupees. Because on allotment, I am taking 30 plus 20 now. Total 50 I am taking on allotment. So, I am going to write 50,000 into 50. But equity share capital always at face value. Face value is only 30 rupees. It's going to be 50,000 into 30. And premium amount I am collecting here, 50,000 into 20. 50,000 into 30, 15 lakhs, and the premium amount is 10 lakhs. So this was the transfer of allotment. Now coming to the receipt. In case of my receipt, okay, share allotment 25 lakhs I have debited. right? But if you see, there was an adjustment of 6,25,000. So basically, I'm not going to receive again this 6,25,000. I'm going to now have to be transferred, because I've already transferred 6,25,000 in my share allotment. I have adjusted it right here. Here itself only I have adjusted. Share allotment total is 25 lakhs. I have pre-adjusted at my application stage 6,25,000. So now balance that I will transfer to share allotment will be only 18,75,000. Now I have done the working note. Now in case of allotment stage, they are saying Kanti Bhai, who was allotted 500 shares, he did not pay the allotment money. So that means in my allotment at the time of receive, I am not going to get money as expected. Okay, so what is the working note? See here. Calls in arrears, working note has to come. Applied shares 75. Allotted is only 50 by the company. So the ratio is what? 75 is to 50, that is 3 is to 2. That means if you have applied for 3, in case you have applied for 3 shares, company allotted only 2 shares to you. They did not reject anybody. They accepted everyone. Very kind of them. But they have allotted only 2 shares if you have applied for 3. So they are telling Kanti Bhai was allotted 500. Kanti Bhai was allotted 500 shares. So how many shares he must have applied? I need to know, na? How many shares he must have applied? So application is to allotment 3 is to 2. If allotted was 500, cross multiply. 500 into 3 divide by 2, you will get 750 shares he had applied. That means at the time of application, Kanti Bhai paid money on 750, means as per 750 shares. 250 shares extra. So he has paid how much extra money? On 250 shares, he had paid 25 rupees at the time of application. Extra 250 shares, that is 6250. And at the time of allotment, we had to collect on 500 shares 50 rupees, that is 25,000, which he did not pay. But he had paid no extra 6250. So my net receivable or net calls in arrears from Kanti Bhai will be 25,000 minus 6250, which is rupees 18,750. Once again I am repeating. In this case, there is a pro-rata allotment. Number of shares allotted will be different as per applied. People had applied 75,000 shares, allotment took place of 50,000. So even Kanti Bhai is facing the same problem, no? He was allotted 500 shares. How he get this allotment? He must have applied for 750. I cross multiplied it. 500 into 3 divided by 2. 750 shares he must have applied. Only then he got 500 shares allotted. That means at the time of application payment of money, he paid money as per 750 shares. 250 shares extra. So on 250 shares extra money, 25 rupees on application, 6250. And at the time of allotment, he had to pay me on 500 shares as per 50 rupees on allotment, right? We are taking how much? 30 plus 20, na? 50 rupees. So 25,000 rupees was due from him. But he had paid me an extra amount of 6250. So actual arrears from him will now only be 18,750. So allotment money receivable will be from 25 lakhs. I have adjusted towards application 6,25,000. Arrears from Kanti is also 18,750. So in my bank account, it will hit by only 18,56,250. It will not be 25 lakhs completely. The first thing that we have understood. Why? Because 6,25,000 which was extra was already received at the time of application. So I am not going to receive this again in my bank. Also, I am not going to receive this 18,750 of Mr. Kanti Bhai. So how much money I am going to get? Only 18 lakhs 56,250. This is what is written over here. in form of the working note. Okay, very, very important. These are the type of sums and questions which they are going to ask you in the exams. If you have understood the concept, cross multiplication, adjustment, there is nothing, there is no way you can go wrong. Only the amounts will change. Okay. So I have finished with my allotment stage. I have finished the receipt and I have finished the transfer first, and then the receipt entry is also done. Now final call. No, sorry, first call. We still have first call of 20 rupees. Okay. So transfer share first call account debit 20 rupees on 50,000 shares 10 lakhs to equity share capital 10 lakhs. Again the story begins of calls in arrears. In the time of the receipt, okay, Kantibai did not pay my allotment money. He also failed to pay my first call. And his shares were forfeited. Sheetal, who was holding 200 shares, did not pay the first call. So on first call, I have calls in arrears of 500 shares of Kantibai and of Sheetal. Total 700 shares there will be calls in arrears to the extent of rupees 20. Simple, no? Now I don't have to do this adjustment again. I already did adjustment. Already allotment has taken place and we are now on the first call stage. Okay, only at the time of allotment, since adjustment of application and allotment was happening, that is why I had to do that Kantibai's extra money received. Now nothing, now that is over. Now at the time of the first call, 500 plus 200, 700 shares I did not receive 20 rupees. So 14,000, that means on balance only 49,300 I have received 20 rupees, 9,86,000 to share first call, 10 lakh rupees. Now company did not make only the final call. They were fed up. They did not make, they didn't receive, they didn't want only that extra 25 last. They have finished here only. Okay. And we had to pass it till here and forfeit the shares. Okay. His shares were forfeited means who? His means Kantibai's. Okay. Sheetal's, they have not told me anything. Kantibai's shares were forfeited. So forfeiture is taking place now. Application 25 rupees, allotment 30 plus 20 on premium, on first call 20. Final call was not made. I cannot write only now as nominal value. Now my nominal value will be 75. I'll have to cancel it at 75 because I have not made only the final call to make it 100. Okay. So total unpaid on 500 shares. Now of Kantibai shares when I'm forfeiting, I will say on 500 shares, I will forfeit only equity share capital can be cancelled only to the extent called up, 75 rupees. Okay. Is there securities premium unpaid? Yes. Unpaid securities premium is there because he did not pay the allotment money. How much unpaid premium? 20 rupees. On how many shares? 500. Simple. 10,000. To share forfeiture account, paid amount on face value. How much did he pay me on my face value? Only 25 rupees he has paid me on my face value. 500 into 25, 12,500. And unpaid amount is calls in arrears. So total unpaid amount will be 30 on allotment plus 20 on first call plus this unpaid securities premium. So total unpaid is 50 plus 20, 70 rupees unpaid. So 70 into 500, 35,000. Being 500 shares of Kantibai forfeited for non-payment of allotment and first call money. Always make this working note. You will never go wrong when you are solving and putting it in the journal entry. Okay. So this is your question number 3. So now you all have also got one more additional understanding of the concept that when the call money, last call is not been made only by the company, share capital also cannot be cancelled by that amount. Okay, so share capital will be cancelled only till the extent of money called by the company, to that extent of that face value. Okay, so question number 3, important question. This is your module question, by the way. Okay. Now I am coming up with some past exam questions. They are little lengthy because they are of good 15. Okay. And in certain papers you will find again about some bonus they are asking, buyback they are asking. So your entire chapter, like your entire paper will be like of share capital only. So these sums are little big, but they are covering all the understanding of your issue of shares for cash, right? Come on. So far so good, clear everyone. Before I move for the past exam question. Okay. So we continue, right? Easy it was. Very easy. Now I am reading the past exam question. Slowly, slowly, we will solve with our own pace and time. Okay, then afterwards you all can solve it in your books after we finish the lecture. This was your December 24. Campa Limited issued 4 lakh shares of rupees 50 each at a premium of rupees 15 per share. Okay, Institute loves giving this big amounts and figures. So we are going to get used to of this, but it is an easy sum, but numbers are big. Okay, so do not miscalculate it. 4 lakh shares, 50 rupees each. Again, there is a premium of 15 rupees on that share. Application was received for 4,50,000 shares. The amount was payable on application 15 rupees. Okay, so now this 15 rupees premium, how they are collecting? They are saying on allotment they took 16 rupees. In that 6 rupees was free. That means it is 10 plus 6. Then on first call they took 20 rupees. 5 rupees was premium. That means it is 15 plus 5. And on first call they took 14 rupees. Premium was 4 rupees. That means again it is 10 plus 4. This is on the face values. Okay. This is the face values. Yeah, 15 plus 15, 30 plus 10, 40 plus 10, 50. And this is the premium. 6 plus 4, 10 plus 5, 15. The premium amount. Half of your question is solved here. Okay. Alpha, who was allotted 6,000 shares, he did not pay the allotment and first call, and thereafter his shares got forfeited. Beta, who was allotted 4,000 shares, he did not pay the first call, and thereafter his shares were forfeited. Gamma, who was allotted 15,000 shares, did not pay the final call, and thereafter his shares were forfeited. Half of the shares of alpha and beta were reissued at 42 rupees. You are required to pass the journal entries for the forfeiture and reissue. Okay, so you do not have to do the story of application, allotment, first call, final call. You are just supposed to pass the journal entries for forfeiture and then for reissue. Forfeiture of alpha shares, beta shares, gamma shares, and reissue of alpha and beta only. That also only to the extent of 50%. Okay, so I will show you all the journal entries and I'll explain you all the how did I get that. Okay, now in the books of Campa Limited journal entries, first I'll go one at a time. Alpha shares I will forfeit 6,000. What did Alpha not pay me? Did not pay me allotment and first call money. Okay, so not paid from here. This entire thing is not paid. So only paid is application money. So now when I am going to forfeit, they are saying that after the first call only the shares were forfeited. So only till here I will consider. I will say 15, 10 and 15. Okay, I am doing alpha right now. Okay, 10 plus 6 and 15 plus 5. Only till here, only first call they made to alpha. They did not make him the final call, and before that only they forfeited his shares. Okay, so it is going to be 40 rupees called up. Okay, and unpaid premium is going to be 11 rupees. So I will be able to cancel also to the extent of 40 rupees, 6,000 shares of alpha. Okay, he was allotted 6,000 shares to the extent of 40 rupees only, because this is only the amount till which they waited, only till the first call. Final call they have not made only. Before that only they forfeited his shares. So cancellation will also happen only to the extent of 40. Is there securities premium unpaid in his case? Yes, unpaid. 6 and 5, 11 rupees. Unpaid securities premium. It will appear in the share forfeiture. Right? So security premium account debit 6,000 into 11 rupees. 6,000. Share forfeiture is what? Paid amount on face value. There is only one amount paid, 15 rupees. Into 6,000. That is only what he paid. 1,000 into 15 rupees application money. 90,000. Now there is calls in arrears. Calls in arrears for the allotment stage and for the call money, I have written it two separately so that you all understand. Okay, calls in arrears on allotment will be 10 plus 6, 16 rupees, total unpaid. So 2 calls in arrears for allotment, 6,000 into 16. And calls in arrears for call in money, 15 plus 5, 20 rupees, 6,000 into 20, 96, and this will be 1,20,000. So the journal entry becomes very simple. It looks also very good. There are 2 stages calls in arrears, allotment stage and call money stage, first call. So both calls in arrears I have written separately. Being 6,000 shares of alpha forfeited for non-payment of what? Allotment money and call money. Easy. Alpha done. Now coming to beta. Beta was allotted 4,000 shares. But he did not pay me my first call money only, and immediately after that I forfeited his shares. So on 4,000 rupees, how much did, again I have waited only for the first call. That means the same example will follow, same working will follow, right? Raising it again, and for alpha it's done. Now for beta. Okay, for beta he paid me my application rupees 15. Okay, then allotment is 10 plus 6, and then final call it is 15 plus 5. Okay, so only 40 rupees on the shares. Immediately after the first call they have forfeited. So again at 40 only I will be able to cancel it. This was paid and first only the call money was unpaid. Correct? So when I'll forfeit, I will forfeit to the extent of 40 rupees. Okay, on the face value. So 4,000 shares into 40, 1,60,000. Securities premium if it is unpaid. Yes, there is an unpaid security premium. See, on the first call 5 rupees security premium is unpaid. So 4,000 shares into 5 rupees. Simple. 20,000. Share forfeiture is paid amount on face value. How much did he pay me on my face value? He has paid me 15 rupees plus he has paid me 10 rupees on my face value. Right? No, beta has paid me 10 plus 15 on my face value. So total he paid me 25 rupees on 4,000. That will become share forfeiture for the company. That is 1 lakh. And calls in arrears is only on his call stage. Total amount unpaid on the call stage. Total unpaid amount. Total unpaid amount. How much is total unpaid? 20 rupees. 15 plus 5. 4,000 into 20. It is 80,000. See, 2 lakhs. Sorry, 1,80,000. It's also 1,80,000. The debit and the credit has to match. being 4,000 shares of beta forfeited for non-payment of first call money. Now next, gamma. Okay, gamma. For gamma, what they are saying, he was allotted 15,000 shares. He did not pay the final call and thereafter his shares were forfeited. So now for gamma, little bit has changed. Okay, why it has changed? Because for him, it is going to be like this. For gamma, he did not pay the final call. So like he finished paying 15 rupees here. Then he paid 10 plus 6. Then he paid 15 plus 5. And then 10 plus 4 he did not pay. All this else he paid. That means on the face value we called full 50 rupees. We waited for gamma. Right? So now equity share capital also will be cancelled at 50 rupees. See? 15,000 into 50. 7,50,000. Is there any unpaid securities premium? Answer is yes. Why? Because on the final call, 4 rupees is the premium and he has not paid me my final call. So 15,000 shares on which security premium to the extent of 4 rupees is unpaid. 60,000 will be securities premium account debit. Share forfeiture is paid amount on face value. How much did he pay me on face value? He has paid me 15 plus 10 plus 15. 30 plus 10, 40 rupees he has paid me on 15,000, 6 lakhs rupees. And calls in arrears is total unpaid amount. Total unpaid amount is the last call, final call, 14 rupees. On how many shares? 15,000 shares. 2,10,000. So when you will do 7,50,000 plus 60, it is going to be 8,10,000, 6 lakhs plus 2,10,000, 8 lakhs. Debit has to have the same amount of credit. Being 15,000 shares of gamma forfeited for non-payment of final call. Right? Now yet the story has not ended. They are saying alpha and beta shares were reissued. Oh, sorry. Half of alpha shares and beta shares were reissued. Half. So 10,000, half will be 5,000 shares. So total from 10,000, the 5,000 shares were reissued for 42 rupees. Face value is 50. That means reissue is happening at a discount. Okay. Come on. So what happened? I got money now for reissue. When I did a reissue, how many shares I reissued? 5,000 shares at 42 rupees. So bank account debit 2,10,000. I have issued at discount no of 8 rupees. 8 rupees discount on 5,000 shares. So from where I will use that money? How I will have money? Company will use that money from share forfeiture. They have no share forfeiture. So they will use 40,000 from there. 2 equity share capital, make it fully paid up. 5,000 shares of rupees 50 each will be 2,50,000. Reissue of 5,000 shares of rupees 50 each at a discount of rupees 8 per share. You write your narration, it is understood that 8 rupees discount is removed from share forfeiture. Now, half shares of alpha, half shares of beta are already out of the picture. So, my share forfeiture also has to get closed. Okay, to that extent of what is reissued. Whatever is balanced, till that it is okay. But whatever is reissued, to that extent that share forfeiture now has to get closed. So, understand one thing. See. How I will get the capital? You can just not take the balance. Okay, whatever was the balance in the share forfeiture, how much we had made? 1 lakh. Then we had 6 lakhs. So 1 lakh, 6 lakhs. Then we have something like whatever. For alpha, we have share forfeiture of 90,000. Okay. Then for beta, we have share forfeiture of 1 lakh. And then for gamma, chalo, forget about gamma. Let's not consider it only because there was no reissue. But for alpha and beta, 90 plus 1 lakh, 1 lakh 96, and we used only 40,000. So balance, we will just take it to capital reserve. No, it cannot happen like balance to be taken to the capital reserve will be to the extent of the reissue took place. See, only 50% of the shares of alpha and gamma were reissued, alpha and beta. Okay, so from that 6,000 of alpha, we reissued 3,000. From beta of 4,000, we issued 2,000. So yet we are left, company is still left with that 3 plus 2 balance. 5,000 shares with them. Later it can be reissued no to somebody else. So at that time I will have to use no share forfeiture if it was at discount. So I will do transfer to the capital reserve also to the extent of only this 5,000 shares which were reissued. So how will I do? 50% of alpha share 3,000, 50% of beta share 2,000, total 5,000 shares. Say for example, I would have forfeited only this 5,000. Then what amount would I have generated in my share forfeiture? If I'll find that out, no, it will become easy. So simple. See, for alpha, when we forfeited his 6,000 shares, in my share forfeiture, 90,000 got generated. See? When we forfeited his 6,000 shares, in the share forfeiture, we had 90,000. Right? So say if I would have forfeited only 3,000 shares, the extent what I have reissued, I would have generated only 45,000, half of it, 50%. Similarly for beta, when we had forfeited his 4,000 shares, in share forfeiture we got a balance of 1 lakh. Say if I would have forfeited only 2,000 shares, 50%, I would have the balance of 50,000. So to the extent of reissue, 50%. Okay, so 1 lakh into 50% is 50,000. So I have the right to use this 50%. 45 plus 50, 95. From that I have used 40,000. So transfer to capital reserve will be 55,000. Once again I am repeating. Transfer of share forfeiture to capital reserve. We do the balance. When all the shares forfeited, all shares forfeited are being reissued. Whatever balance remains in the share forfeiture, put it to capital reserve and close the share forfeiture account. In our case, share forfeiture has also happened, reissue also has taken place, but only to the extent of 50%. So share forfeiture happened of, forfeiture took place of 6,000 shares plus 4,000 of beta, 10,000. Okay, but reissue happened only of 50% of the shares, that is 5,000. Right? When we had done a forfeiture of this much shares, we had generated 1 lakh plus 90,000 no? In the share forfeiture. Yeah, 90,000 plus 1 lakh. So 1 lakh 90. So 50% if I had reissued, 50% of 1 lakh 90 will be how much? 95,000. This much of right I have to use for my share forfeiture. From this 95,000, I used 40 at the time of reissue. So then there is a balance which is remaining of 35,000. Sorry, 45,000, no? 55,000. Of 55,000 which has to be transferred and closed to that extent. Okay, so balance 55,000 will be my one-time profit known and transferred to capital reserve. Okay, so understand this is important. Okay, you can just not blindly close share forfeiture. If entire shares would have been reissued, I would have blindly closed. But since only 50% has been reissued, I will use only 50% of the share forfeiture, and from that whatever I have used for discount on issue, I will subtract and balance. I'll take it to the capital reserve account. I hope this is understood by everyone. Got it. All right. So we have finished one exam question. Okay, so you see this, it's a simple question with a little bit of twist here and there, but if you will know this, you will be able to definitely attempt it. Now coming to another question, June 24 attempt, they are saying ZX Limited decided to issue 60,000 shares of rupees 10 each. Premium is 2 rupees per share. The amount is paid as follows. Application they will take 2 rupees. On allotment they will take 5 rupees. How? Including premium. That means if premium is 2, on face value they are taking 3. First call 2 and final call 3. Applications were received for 1 lakh shares. Shares were allotted on pro-rata basis. Walter, who was allotted 1000 shares, okay, did not pay me the allotment money and the subsequent calls. Walter's shares were forfeited. Pass the necessary journal. Okay, so let's begin. In the books of ZX, number of shares 60,000, face value 10, premium 2, issue price 12. Application allotment, first call, final call I have received. Applications were received for 1 lakh shares. No refund was given. No rejection was done. That means pro rata allotment. 1 lakh is to 60,000. 10 is to 6, I can say. So if in case you have applied for 10 shares, you will be given 6 shares in case of allotment. Now Walter was allotted 1000 shares. That means he must have applied for more, na? He was allotted 1000, it is given. So application is to allotment 10 is to 6. He was allotted 1000 shares. So cross multiply 1000 into 10 divide by 6. Okay, 1000 into 10 divide that by 6. You will get 1666 point something something. Ignore the decimals. You will take only the figures before the decimal, 1666, because fractional shares cannot be allotted. Okay, fractional shares cannot be allotted or applied. So 1666 shares was applied by Walter, but he was allotted only 1000 shares. That means on 666 shares he had paid some extra money at the time of application. How much money was to be collected at application? 2 rupees. That means 1332 he has paid extra. Okay, I'll have to remember this because he's not paid me some money. So calls in arrears has to be reflected. So let us pass the journal entry. First application stage, receipt, bank account debit. I'll receive money on 1 lakh shares into 2 lakhs share application. Transfer. Share application account debit, full 2 lakhs. To equity share capital will be how much? Okay. To the extent of application, 60,000 into 2, 1,20,000. And to share allotment which has been adjusted. So balance entire 80,000 I had adjusted to the share allotment account. Correct, because I can do equity share capital only at nominal value. So 60,000 into 2 rupees is the amount to be collected on application. So balance I adjusted with the allotment stage, like how we had done in my question number 2 previous sum. Same thing, because there is no refund happening. Now coming to the share allotment stage. On allotment we are taking 3 plus 2. Face value 3, 2 rupees premium. Okay, so share allotment account debit, transfer on 60,000, 5 rupees, 3 lakhs. Equity share capital at face value 3 rupees, 60,000 into 3, 1 lakh 80, and premium 60,000 into 2, 1 lakh 20,000. Then they are saying that this person Mr. Walter, he did not pay me my allotment money and subsequent calls also. He did not pay me my first call as well as my final call. So basically, he's not paying my allotment, my first call, and final call. And he was allotted with 1000 shares. We know if he was allotted 1000, he had applied for 166 shares. Okay, 666 shares extra. We have already done his calculation. So now in the bank, at the time of the receipt, okay, at the time of the receipt, calls in arrears has to appear. Okay, so calls in arrears will be how much? Mr. Walter had to pay 1000 on 1000 shares allotted 5 rupees. That is 5000 rupees. But he had paid me extra. No, we have already done the calculation of the working note. Right? He had paid me no extra. So this 1000 into 5, this 5000 rupees is my calls in arrears for my allotment stage. Subtract this extra paid already by him. So actual calls in arrears will be 5000 minus 1332. It will be 3668. Okay, so the calls in arrears amount will be 3668. In case of my share allotment, on share allotment, how many shares I am allotting? 60,000 shares. 5 rupees I am collecting on allotment. That means I have to take how much? 60,000 into 5, 3 lakhs. But 80,000 I already received, no, for that extra 40,000 into 20 extra money I had already received at the application stage. So now I am not going to receive that money again in my bank account. So here I am going to mention only 2,20,000 because I am adjusting my application and allotment. So in my bank from 2,20,000, I am not receiving 3668. So balance will be my bank. Right? Allotment money of 80,000 was already received at the time of application. Extra, no? This 1 lakh, no? Should have been 60,000 into 2. We have done 1 lakh into 2. Right? So this extra 40,000 into 2, 80,000 rupees is adjusted at the allotment stage here. I did not refund anybody. So this now 80,000 has to reflect here, no? The adjustment to share allotment. And this calls in arrears is there calculated as per the working note. So balance money will only be received in the bank account. So receipt entry done for the call allotment stage. Okay, share allotment stage. Now first call and final call. First call transfer. Share first call account debit. How many? 3,000 to 2 rupees I am taking on first call. Equity share capital. At the time of receipt, there will be calls in arrears on 1000 shares of Mr. Walter. Now no adjustment is required. Adjustment was only between application and allotment. Over. Now on 1000 shares I have to pass the journal entry. Mr. Walter having 1000 shares did not pay me my 2 rupees. That means I received money only on balance 59,000 shares. Bank account debit 59 into 2, 1,18,000. 1000 into 2 calls in arrears, 2000 to share first call account. 1,20,000. Receipt entry done. Same thing now for the final call. Final call, I will first do the transfer. Share final call account debit, I am collecting 3 rupees on 60,000 shares. So share final call 1,80,000 to equity share capital 1,80,000. Being share final call transferred to equity share capital. But at the time of the receipt, again, Mr. Walter did not pay me my 3 rupees on his 1000 shares. So that will be my calls in arrears. That means money was received only on 59,000 shares. That is 1,77,000. Share final call. His shares were forfeited. No reissue or anything they're telling me. His shares were forfeited. Means how many shares were forfeited? 1000 shares. Full 10 rupees we have called up. So we will take that full 10 rupees face value. So 10,000. Securities premium is unpaid. Yes, on allotment this 2 rupees was not paid by Mr. Walter C. He did not pay me my allotment money. So he did not pay me my premium. So 2 into 1000. Then to share forfeiture account. Now before I take you all to the share forfeiture, okay, there is calls in arrears on allotment which we have mentioned. 3668. The calls in arrears at the time of allotment was 3668 rupees. Then there was first call 2000 rupees, 1000 into 2, and then 3000 rupees. Okay, so basically your share forfeiture will be your balancing figure. Okay, your share forfeiture will be your balancing figure. Okay, balancing figure. Why balancing figure? Because there are this information which they have given me, okay, about payment of money on share. Only the amount paid has to be transferred. No, only 2 rupees basically on 2000 into 2 rupees. Amount paid on the share nominal value 1000 into 2, that is 2000 rupees. But if you see, he has also paid me, he has also paid me 1332 extra. See this 1332. He's already paid me that. That will also be forfeited. Okay, it was adjusted and it will be forfeited. So here when I have adjusted in the calls in arrears in the allotment stage, means here it will be 2000 plus 1332. That will be my share forfeiture count. Two calls in arrears for allotment stage, which we have already passed in our journal entry here. Here it is 3668. Then calls in arrears for your first call and calls in arrears for your final call. Okay, so this is how you are going to present your journal entry. Here, understood? Yeah. So this also question is done, June 24. Now the next question. This is a little lengthy question. It will take time also for us to solve. Okay, but since we have already done oversubscription, pro-rata allotment, so now this is going to be a bit readable and understandable also. Okay. Now Technocrats Limited, they had invited applications for 1 lakh equity shares of rupees 30 each. The shares were issued at a 15 rupees per share, which is payable as follows. They are taking money on application and allotment together, 24 rupees. And that includes 9 rupees premium. And then they are taking money on first and final call together, balance, including whatever is the remaining premium. Applications were received for 1,50,000 shares. Again, this is a oversubscription matter. Applicants for 10,000 was rejected. Okay. So from that 1,50,000, 10,000 they rejected. And pro-rata allotment was made to the remaining applicants. They made two categories. For category A, if you have applied for 80,000 shares, they were allotted 60,000 shares. And category B, applicants of 60,000 shares were allotted 40,000. Yes, 60 plus 40 makes it 1 lakh. That is what the subscription was for, application was for. And 80 plus 60, 1,40,000. Yes, from 1,50,000, 10 was refunded. So 1,40,000 they are doing pro-rata. Mr. X, who belonged to category A, he was allotted 300 shares. He failed to pay the call money. Mr. Y, who belonged to category B and applied for 300 shares, he also failed to pay the call money. These shares were forfeited and they were reissued at rupees 36 fully paid up. Assume that the excess amount received on application is to be adjusted towards the share application account first, share capital account first. You are required to pass the necessary journal entries. When excess application money is utilized for payment of share capital. What are the restrictions on using securities premium account as the provision of Companies Act 2013? Okay, we are supposed to pass the journal entry. Now, before passing the journal entries, I have written certain given. Number of shares to be given for subscription was 1 lakh. Face value of the share is 30 rupees and 15 rupees they are collecting on premium. Total issue price becomes 45 rupees. Application and allotment they are collecting together. First and final call also they are collecting together. Face value and premium. How did I get this? You see this allotment and application they are taking 24 rupees. 9 rupees is premium. Okay, so if they are taking 24 rupees and 9 rupees is premium, that means balance will be my face value amount 15 rupees. Right? Total amount to be collected. Issue price is 45. 24 is to be collected on application and allotment. So balance will be 21. Premium total is 15. 9 I collected in application and allotment stage. That means balance 6 is going to be collected on the first and final call. And balance also is going to be 15 rupees on face value. So 30 plus 15, then it will make to 45. So this is how I got my amount to be collected on the face value and as the premium. So that is how you get the total. Because they have directly given you 24 on application allotment, including 9 rupees premium. That means obviously if 9 is premium and 24 is collected, means 15 rupees is on my face value. And balance 15 I will take it on my first and final call. Okay. Now applications were received for 1,50,000 shares and 10,000 shares were rejected. That means 1,40,000 allotment is done on pro-rata. In case of category A, they are saying if you have applied for 80,000, allotment is for 60. Mr. A is belonging to this category A. Mr. A is belonging to category A and he was allotted 300 shares. So how many shares he must have applied for? I can calculate. Application is to allotment 80,000 is to 60. He was allotted 300 shares. So how much he must have applied? I can cross multiply, no? It can be 80,000 into 300 divided by 60,000. So he has applied for 400 shares. Means on extra 100 shares, no, he has paid money. He should have paid application money. He has paid on 400 shares. 400 into 24, 9,600. He has paid. He should have paid only how much? To the extent of allotment, 300 into 24. So how much did he pay extra? 2,400. So when calls and arrears will take place, I'll have to remember that this money also he has paid, no extra. Then category B, they are saying application if 60, allotment is 40. Okay. And there is Mr. Y who was belonging to this category. He had applied for 300. So if he has applied for 300, how much he will be allotted? It will be 300 into 40,000 divided by 60,000. 200 shares he must have got allotted. Mr. B paid application money on 300. 300 into 24, 7,200. He should have paid only on 200 shares because that was his allotment. 200 into 24, 4,800. So extra paid by him is also 2,400 rupees. Okay. Because that 100 rupees extra he had applied, 100 shares extra he had applied, 100 shares extra applied, no? 24 rupees paid on 1,400. Same thing happened with Mr. A. Mr. X. This is Mr. X in category. Even he had applied for 100 rupees, 100 shares extra, 24 rupees, 2,000. Okay, so I'm calculating this and keeping. Now journal entries will become easy. Okay, so for journal entries, application stage and allotment stage is together. So receipt and transfer I'll do here first. So bank account debit to share application and allotment account. But I received application for 1,50,000 shares into 24. So it will be 36 lakhs to share application and allotment. This was my receipt. Transfer. Slowly we will do it. Okay, share application and allotment 36. Whatever we have credited, I am debiting here. But equity share capital can be to the extent of only 1 lakh at the face value, 15 rupees. Even securities premium can be only 1 lakh. Whatever is the premium amount, 9 rupees given to us. So 1 lakh into 15, 15 lakhs, and securities premium 1 lakh into 9, 9 lakhs. I am refunding 10,000 applications. So that means 24 rupees which I collected on that at my application stage. For 10,000 shares, I am refunding it. I am rejecting them. So 10,000 into 24, 2,40,000 refund. So again, to bank account refund. And balance 40,000 extra which I am adjusting, 24 rupees which I collected on the extra 40,000 shares, that I will adjust with share first and final call account, 9,60,000. Right? Being application allotment money transferred to equity share capital and securities premium, balance adjusted with final call and also refunded. Okay, you do not need to write big stories in narration. Try to keep it short, okay, so that you don't waste your time. So we have finished with the transfer also. Now first and final call, I'll first do the transfer. So share first and final call account debit. Right? How much money I am receiving on share first and final call total? 21 rupees. 21 rupees I am receiving, no? On 1 lakh shares. So 1 lakh into 21. Here 1 lakh into 21. 21 lakhs. But on capital I am receiving only 15 rupees. And balance 6 rupees of the premium which was remaining. Right? There was 15 rupees premium. 9 I had already collected first. Balance 6 was remaining. So on 1 lakh 6 lakhs rupees will be my securities premium. Now the receipt. Now here I did not get the money of Mr. X and Mr. Y. Okay. X, who belonged to category A, he failed to pay the call money, and Y also failed to pay the call money. So now at the call stage, when I will receive the money, receipt entry, in my bank I am going to receive less amount. Okay. Why? Because there is calls in arrears. Now see the calls in arrears working note first. Share first and final call also I'll explain you all, because we have done adjustment. Share first and final call, we have debited by 21 lakhs. We have to credit also by 21 lakhs. But there is 9,60,000 on top. This we have adjusted. So I cannot credit it now by 21 lakhs. It has to be 21 lakhs minus 9,60,000. That will be 11,40,000. This is only what I can do, because this 9,60,000 was adjusted at the application stage. Already received previously. Now again I am not going to receive it. So calls in arrears for Mr. X and Mr. Y. Mr. X and Mr. Y. Mr. X, 300 shares. Allotted 300 shares. Okay. He had to pay me 21 rupees on call money. Final call, first and final call. So on 300, 21 rupees is 6,300 is my calls in arrears. But he had paid me no extra on my time of application on that 100 shares extra. So I'll remove that 2,400. I've already received extra. So actual net calls in arrears will be 3,900. Same thing for Mr. Y. Mr. Y was allotted 200 shares. That means he has to pay me 21 rupees on my first and final call for his 200 shares. So 200 into 21, 4,200 he had to pay me. He did not pay. Calls in arrears. But I have his 2,400 extra with me already. So I will subtract that 1,800 net amount. So calls in arrears will be 3,900 of X and 1,800 of Y. That will make 5,700 as calls in arrears. Please make nice working notes. Explain over there everything properly. So the balance will be how much? From 1,14,000 minus 5,700. 11 lakh 34,300. 11 lakh 40 I had to receive, but I did not get money to the extent of 5,700. So balance will come in my bank account. Okay. Now both these shares were forfeited and they were reissued as rupees 36 fully paid up. So both the shares X 300 and Y 200. X 300 shares and Y's 200 shares were forfeited. Total 500 shares, they were forfeited. Okay, how much amount will be my shares? 30 rupees, no, face value. 15 plus 15 as it is 30 rupees. So 500 shares, face value 30. Is there any securities premium unpaid? Yes. On the first and final call only the securities premium is unpaid. This one. This is unpaid. This premium is paid 9 rupees. But this is unpaid. So 6 rupees for 500 shares. 3,000. Total calls in arrears we just did 5,700. So share forfeiture will be your balancing figure in this case. Okay, it is going to be the balancing figure. Try not to get into adding up and subtraction and all that. Just take the balancing. Okay, because there is lot into this. Extra money paid, this, that. So there is lot into it. So the balance is your share forfeiture account. Now this money, these shares were forfeited. After that they were reissued for 36 rupees. 30 rupees is the face value. I reissued also at premium. So 500 into 36 received in my bank, 18,000. Share capital can be written only at nominal value. So balance 6 is the premium. Being forfeited, shares reissued at a premium of rupees 6 per share. So my share forfeiture is not used only, unused totally. And all the shares have been already reissued now. So what will I do of this share forfeiture? Nothing. I'll have to transfer it to the capital reserve. Share forfeiture account debit to capital reserve 12,300. When you will pick up the model answers of the institute, even they have done it in the same manner. Balancing figure, they have taken it as the share forfeiture. Okay. And bank account is very simple. In the bank account, debit to balance. Okay. 1 minute. They have given me something. Nothing, no? Their application. Okay, you all do not have to make this bank. If you all want, you all can, but there is something which is not. This you all can cancel. Or what is important is past necessary journal entries we did. We utilized the money payment for share capital. Last one is your, this is for 5 marks. Theory question. What are the restrictions for using of securities premium as per the provision of Company Act? What is the implication if you violate this provision? Okay. So premium received on issue of shares is a capital receipt. It has to be specifically transferred to a separate account called securities premium account. And according to the Companies Act, securities premium account can be only used for the following purpose. So this 5 purpose they have given. 1, you can use it towards issue of unissued shares to the members of the company to make it as a fully paid up bonus. So for fully paid up bonus, you can use securities premium. If you want to write off any preliminary expenses of the company, you can use it. Any expenses of a commission paid or discount allowed for issue of shares and debentures of the company, yes, you can use it. In providing for any premium you have to pay at the time of redemption, you can use it, or at the time of buyback, or for purchase of its own shares or other securities under section 60. And if anyone contravenes these provisions, okay, and utilizes the amount of securities premium except the modes, it will attract provisions related to reduction of share capital under section 66 of Companies Act 2013. Okay, so this was for technocrats. Now the question number 25 for June 2025, these 2 questions are for issue of shares for consideration other than cash. Other than cash, which I had explained. So now we will get to know how to pass the journal entries also. Let us read the sum. Divya Limited, they purchased machinery for 1,20,000 and building was worth 2 lakhs from Tara. So Tara is the vendor, Divya is the purchaser. For consideration other than cash, and purchase consideration they agreed is 3 lakhs rupees. So they are purchasing it things for 1,20,000 plus 2 lakhs. Means it is 3,20,000. But purchase consideration they have agreed that 3 lakhs will be satisfied by issuing 3,012% debentures of rupees 100 each. Now this is not for like issue of cash, they have issued debentures, but I want to explain it to you all here only, that one of the concept gets cleared and a past exam question is also getting solved. There will be only 2 journal entries always. One is for the purchase of whatever you are doing, whatever capital assets you are purchasing, and the second journal entry will be for the payment. Okay, now see this. Building account and plant and machinery. Building I took it in 2 lakhs, plant and machinery I took in 1,20,000. From whom? From Tara. I am taking things worth 3,20,000 and purchase consideration is decided only 3 lakhs. Means I got 20,000 profit na. I have to pay only 3 instead of 3,20,000. But that 20 is not a P&L profit. It is not your yearly profit. It is a capital profit. Therefore, capital reserve. Okay. And this 3 lakhs, I am not giving cash or bank. I am not paying from my bank account. What I am doing, Tara Limited account debit 3 lakhs to 12% debentures account 3 lakhs. 3,000 debentures of rupees 100 each makes it 3 lakhs. Same thing they could have asked in the form of equity share, 3,000 shares of rupees 100 each. Done, no? So same thing, consideration other than cash. Next one. A new process for development of active pharmaceutical ingredients, APIs, is developed by Professor Shastri. This process is subsequently patented. The APIs are used to manufacture medicines for cure of cardiac diseases. The patent is bought by a pharmaceutical company named Ratan & Company. The patent was bought for a consideration of rupees 45 lakhs. The deal involves payment of 15 lakhs to Professor Shastri and allotment of shares of rupees 10 each at a discount of rupees 2 per share for the balance consideration of 30 lakhs. Means they are saying that 45 lakhs we have to pay. But from there we will pay 15 in form of cash payment form, and balance 30 we will give shares. Okay, the face value of the share is 10, but we are giving it in the form of discount. So issue price becomes 8 over here. Okay. So we have to pass the journal entries 5 marks. See this. We have bought what patent? From whom? Professor Shastri. So patent becomes my asset. Vendor is Professor Shastri. Patent account debit to Shastri. 45 lakhs. Now I have to pay this 45 lakhs to Mr. Shastri. How I am paying? Professor Shastri account debit 45. From bank 15 lakhs will go out. That is what they have told me. But the balance is share capital in form of shares. Now how will I come to know the discount? See, discount 2 rupees. But how will I take 2 rupees on how many shares? Do I know number of shares? Okay, even here I did not know number. I knew the number of debentures, 3000 debentures of rupees 100 each. Here I don't know only my number of shares. I know face value, I know discount, I know my issue price. So now whenever there is a consideration to be paid, 30 lakhs we have to pay in the balance. 15 lakhs we paid, no? 15 lakhs has gone from my bank account. So balance 30 lakhs is remaining. I am paying that in the form of shares. Issue price of that share is 8 rupees, I know. So number of shares will always be consideration upon issue price. If ever you want to find number of shares given to a particular vendor, number of shares given or allotted to that particular vendor, always take the purchase consideration, divide that by the issue price directly. If it was at a premium also issue price, if it is a discount also issue price, just divide that by the issue price, you will get the number of shares. So 30 crores, sorry, it is 30 crores, divide that by 8, so you will get 37 lakh 50,000 shares of rupees 10 each. These many shares you will allot. So discount will be 37 lakh 50,000 into 2, 75 lakhs. So now I can write it here. Discount on issue of shares 75 lakhs, and share capital will be how much? 37 crore 50 lakhs. How did I get that? 37 lakh 50,000 into the face value of the share is 10 rupees. Always we write share capital at the face value. This discount of 2 rupees is 37 lakhs shares, 2 rupees discount. Got it? So that is why this particular question is for 5 marks. Only for this 2 journal entries. For consideration other than cash, always remember, in order to find out, if they have given number of shares, there is no problem only. But if they have not given the number of shares, that consideration you have to take and divide it by the issue price to get the number of shares. Because share capital cannot be written at any other amount but only at the face value. So what is the face value? 10. But how many shares? 37 lakh 50,000. That will become 37 crores 50 lakhs as an amount of the share capital. I think so. Yes. No. It is 45 CR. 45 crores. 15 crores we paid it in cash. 37, basically 30 crores we had to supposed to pay it elsewhere. Okay. 37 crores. 30 lakhs. 37 crores 50 lakhs minus 75 lakhs will give you 30 crores. Okay. So this is it with your past exam questions also for issue of shares. Alright. So what I will suggest for you all is that once you all have finished these type of sums, okay, you all just need to know these maximum journal entries as per the example which I taught you all. Okay, once you all are done with this particular part, you all can do only the past exam questions also know of the other types, that is your other parts of this chapter, accounting for share capital. It will be more than enough and they are very easy. Redemption, buyback, bonus, all those are really, really simple. You all have, what you all have to understand is the basic, the main crux, and these are important sums and they are for carrying good weightage. Okay, 5 plus 3 over here, only 8 marks is done. Here and there, little bit theory, they ask 10 marks is done again from this particular part of this chapter. Okay, so we are done with the issue of shares accounting for share capital. Thank you, everyone. I hope you all have been able to kind of completely have a comprehensive view of this particular chapter. Okay, do you have any doubt? Will be coming again. All right. So, if this video and this lecture was helpful for you or this marathon, just put a thumbs up or just hit the like button, and I'll see you all in my next class. Okay. See you all, everyone. Bye bye. If you have more friends, get it is left. Others you have cleared.